Hey, what's going on, everybody? Welcome back to Bonafide Investing, where we talk all things high yield investing, options, futures, as well as investment goals. If you're new to the channel, a little background on the channel. What it's about is I took about a quarter of my net worth and I put it into a high yield all-weather portfolio that hopefully will keep paying my bills as well as maintain and pay down my margin over time. So it's a $500,000 portfolio roughly. One of two things are going to happen with this long term. It's either going to do well enough to where I can continue to pay my bills and control for margin and risk, and I'll keep adding to it as I go, or it's going to fail, and I'll just try something new if that's the case. So past videos, what we've done is we've looked at the portfolio, the reasons I use the various ETFs as well as closed-end funds to gain diversification as well as high yield. I also use, I sell puts, buy puts, as well as calls when I'm assigned a stock that I wouldn't mind owning. So hit like and subscribe if you enjoy what we're doing here. Again, nothing here at Bonafide Investing is investment advice. So please do your own due diligence when making your investment choices. So what I want to talk about today, give a portfolio update and talk a little bit about crypto, how I invest in crypto, the amounts and the reasons for it. So Friday was a very volatile day. Stocks and bonds were down, rates rose, stocks were down. The NASDAQ was down about 1%. Gold, Bitcoin were pretty much flat on the day. So Cash for Life took about a 1% hit yesterday. No big deal. I was able to dollar cost average back into my positions, which I always like buying lower than higher. And the way the markets currently sit, I don't really see a lot of value anywhere, to be honest. I think that I think cash is not a bad place to be. And that's a tough spot to want to be when you're trying to have a high yield portfolio. So I had 4 sold puts expire worthless yesterday. I had Coca-Cola, PG&E, as well as Verizon and AT&T. So I kept those premiums that I sold last week. And I'll probably just turn around and do the same thing on Monday when the market's open. I'll probably sell a put on each of those. What I'll also do is I'm thinking about buying another QQQ put, 20% out of the money, like I've already done prior. That way, again, can control for that, collapse risk, that deep potential sell-off, as I think markets are going to be very volatile in 2026. Rates rose. So TLTW got hit pretty hard yesterday. No big deal. I think we could see the 10-year yield get back to 4.5 to 4.6. And I think we could see that pretty quickly. It's not going to scare me out of the position because, again, I'm dollar cost averaging about $20 per market day back into TLTW. So I don't mind buying it lower continually if rates do continue to rise. So how do I get crypto exposure, right? I was actually dollar cost averaging into Bitcoin, into Ethereum, as well as XRP. Those are the 3 I've pretty much owned. What I did, I've been buying Bitcoin since probably 2017, 2018. How to gain with my overall position. What I realized was the direct exposure really didn't pay me anything, right? So what's nice is Roundhill came out with a couple ETFs that really piqued my interest in the sense that they sell covered calls on the underlying ETF that holds Bitcoin and Ethereum. So I sold my Bitcoin, Ethereum, XRP tokens, the actual coins themselves, and I put them into YBTC and YETH. Now, I currently don't hold them across the portfolios. You can see I actually sold out of them in early December after the crypto correction. And while everything kind of consolidates, recalibrates, I think in the crypto space, I wanted to take that tax loss harvest for 2025, but I can buy back into those positions as of January 6th to avoid the wash sale. So I'm contemplating doing that, opening back up those positions as well as dollar cost averaging into YETH and YBTC. We'll look at both of those here in this video. So currently though, excuse me, I have my crypto exposure various ways. I've got it in WPay. WPay holds their underlying single ETFs. They've got exposure to MicroStrategy as well as Coinbase, which are two companies that move pretty close in sync with Bitcoin. MicroStrategy is actually a leverage play on Bitcoin, and we've seen that. So if Bitcoin's down 1%, MicroStrategy is typically down 2 or 3%. And if Bitcoin's up 1%, MicroStrategy or Strategy Now, whatever they call themselves, they're usually up about 2 or 3%, right? So I think that that's a leverage play on Bitcoin. So it's not like I'm completely, I don't have zero exposure to the crypto space. I am getting some through WPay, which is currently my largest holding across this allocation, as well as YMAX, right? YMAX also has exposure to their single ETFs. They've got exposure to Strategy as well. They've also got exposure to Coinbase. They've also got exposure to a company, Mara, M-A-R-A. Mara is very similar to Strategy. However, they don't have the bond program, right? They're miners. They buy and mine, but they do not have the treasury, right? The bond program that Strategy has. So I actually find Mara in a lot of ways less risky than Strategy, in my opinion. So still getting exposure across that space. We can look at YETH first. This is the Round Hill covered call ETF, and what they're doing is they are taking the ETF ETHA and basically selling calls on it. What I like about YETH is that it's paying weekly dividends, right? They go ex-dividend on Wednesdays, and they typically pay on Thursdays. So you get that nice weekly income. The distribution yield's been pretty much anywhere from about 40 to 60% annualized. So I think it controls for risk nicely, right? I don't think you have the only exposure to the coin. You're getting paid to hold it, right? Downside of that is that, like any other covered call ETF, you're going to miss out on some of the upside. So when Ethereum potentially does recover and goes back up, you're not going to see all the upside, but you're going to get that income to offset that volatility and to offset that risk. So I really like this one. I think the folks at Round Hill are being, pretty responsible, right? Very detailed. I think it's good management overall with this ETF. So, and again, I sold it early December because I wanted to take the loss I had and just buy back in, like I said, when the crypto market kind of resets here. If it goes down more, selfishly, that's great. Would love to buy back into it even lower than where it's at now in January, but we will see. The other one I want to look at is YBTC. Let me pull that one up here quickly. And this is Round Hill's Bitcoin covered call strategy. Now, of all the coins, my opinion on crypto is that Bitcoin, we're going on about 20 years now of history. I think it has shown itself to be a potential store of value. Do I trust it as much as gold? Absolutely not, right? 5,000 years versus 18, 19 years, and in my mind is very different. But I think Bitcoin has proved itself as a potential store of value, a potential alternate currency to the US dollar. Now, what this does, very similar to YETH, is that it will sell calls on IBIT. IBIT is the ETF that has exposure to Bitcoin. And this one's been yielding a little bit lower than YETH. It's still yielding around 40%, typically around 40, 45%. Just depends on the volatility in the crypto space, right? Usually when volatility goes up, the distributions on these ETFs goes up as well, and vice versa. So again, great ETF, sold it in December like YETH, wanted to take that tax loss, and I'll buy back January 6th or later, most likely. So, but of all the cryptos, I think Bitcoin is the one that has been the most solid. I think it's the blue chip, whatever you want to call it, of the crypto space. If you want to, play around in Ethereum, XRP, Solana, I know there's some other coins out there. But again, I only keep my crypto exposure to about 1 to 2% of the portfolio when I can. As a matter of fact, like I showed you in WPay and YMAX, I probably have even a little bit more than that, just based on the percentages that those baskets hold as well. So if Bitcoin's going to really do what a lot of the proponents of it say it's going to do, 1% to 2% is plenty in my mind to really get that growth and that price appreciation should it continue up in the future. So again, Bitcoin to me is still speculative, but I do see its potential moving forward as well. So I don't think it's a bad place for anybody to risk 1%, 2% of their portfolio. I know some people call for more allocation, some none, but I think for me at least 1% to 2%, I'm comfortable with that. So wanted to share these two ETFs. They're my two favorites in the crypto space for a high income portfolio. But again, do your own due diligence around these funds before you decide to purchase them or not. So just some updated stats here as well. We're sitting at, my margin buffer did go back up to 63, a little over 63%. We were just under 60% as of Friday. Reason that it went back up is that distributions did come in Friday, as well as my options collateral dropped from about 21,500 down to 6,700 with those puts expiring worthless yesterday. So looking across the portfolio, TLTW did take a hit yesterday from rates rising. SGov, that's my cash position. That's really going to stay pretty much where it is at all times. It's going to creep up maybe 1 or 2 cents a day to account for the eventual monthly distribution that it will pay at the beginning of each month. But really no volatility as it's a 0 to 3 month treasury bill play. CRF has held up really well with yesterday's sell-off, still sitting right around that $8 mark. WPay took it on the chin yesterday. Again, it is leverage 1.2, so on down days, it's going to get hit a little bit harder. YMAX, same thing. Though it's not leverage, it's still going to get hit harder on volatile days to the downside. And then the Qs got hit pretty hard. QLDY actually fell a little bit more than it had been on some down days, but it also went ex-div yesterday as well, as it will pay a dividend on Monday. So that, I think that ex-div date plus that down day accounted for that roughly 2.3% down. The S&P, XDTE, and SPY held up a little bit better. RDTE did get hit a little bit harder than the Russell did. Again, it's that 0 DTE though. So I think that part of that downside will be the distribution being accounted for as well. Gold is pretty flat. I think I mentioned on a prior video that GDXY, since it tracks the miners, not the gold price itself, it typically moves with the market more than the gold price. So not surprised to see that down a little bit yesterday. GLDY was up nicely. So that is my largest allocation currently across the gold space. IAU, IGLD, up or down just a little bit here, no big deal. And then IYRI, pretty flat, no surprise, as long rates were higher. Generally, when rates go higher, IYRI is probably going to go lower. It's usually going to move inversely of the long-term rates, as it's a real estate play. So coming up this week, I think, again, I think it'll be a very uneventful December, probably flat to up. We will see. Some of my plans I want to do is, like I said, potentially buy another put on the Qs just to hedge more of my longs in this portfolio. And probably open a position of YQQQ. YQQQ, I've talked about it before. I've owned it before. And looking to buy that probably around January 5th or 6th, as I sold a pretty large chunk, around $80,000 of it early December. And want to make sure I can lock in that loss before buying it back. So looking at opening up a position there, I think I'm going to bring over another $100,000 into this strategy in January. But a lot of it is going to be on the short side, right? I'm going to buy probably at least one more Leaps put, probably 2 years out. And I will probably get a large exposure to YQQQ. I'm thinking probably around the $50,000 mark. And then most likely distribute the other roughly 40,000, 45,000 across this strategy in its in the equal amounts, the percentage targets that I have for each of these holdings. So love to know your thoughts. Love to hear your comments. Again, hit like and subscribe if you like what we're doing here. The next videos, I want to talk about margin. I want to talk about why I use it, how I can pay it off quickly if I needed to, how I can sell out and get out of margin if I needed to. So why I don't think there's a lot of risk around margin if you use it responsibly and wisely. So hope you enjoyed the video. Thanks for tuning in. Have a great day.